You were obviously in the Obama administration. We know where your sympathies lie. But Donald Trump tweeted this morning, the economy is in its best shape that it has been in decades. So should he get credit? Is he wrong? Why is it okay for him to brag about this?
If I had an economy this good, I'd be bragging too, so I don't begrudge President Trump doing that. I think that, taking stock of where things are, you have a good growth rate, you have a low unemployment rate, that's on the plus side. Investments picking up, that's on the plus side. You still have really weak wage growth, and actually all of it being eaten up by inflation this year. That's very much on the minus side. And far and away, the most important thing in the economy is productivity growth, and it's way too soon to tell if we've seen any increase in that. And without an increase in productivity growth, we're not going to be able to sustain anything like the economy we're seeing now. Do
you see any policies in place or any trends in corporate America that are going to change that productivity puzzle?
With growth this year, there's two different theories. One is a supply side one, that we're getting more productivity, more business investment. If that's true, then this will last. I think the more compelling theory, though, is a demand side one. We're seeing a big fiscal stimulus, about 1.2% of GDP, from both tax cuts and spending increases. And when you see a fiscal stimulus like that, you get a temporary boost to growth, but it doesn't last. I think that second scenario is more likely, but time will tell.
Tariffs, obviously, a big issue. You're no different, I'm sure, than 100% of economists, as Alan Blinder put it, in thinking that tariffs are going to be a negative for the economy. But it doesn't show up in the data.
Yeah, I'm not that surprised, because so far we've only seen tariffs on a limited set of products coming from a limited set of countries. We are going to potentially see more. We're going to potentially see more retaliation. And so I think it could get a lot more serious. The other thing is you wouldn't expect it to show up in something like consumer spending, but business investment, certainly there's some heightened uncertainty. But I always think uncertainty matters even less than what's really going on in the economy. And the real thing going on in the economy is a big fiscal stimulus.
We've got a big fiscal stimulus. We have the tariffs to whatever extent they are. So what is your forecast for the next couple of quarters into 2019 for the economy?
Fortunately, try not to make any forecasts. And when I do, I make them long range enough that no one can really
go beyond 2019, but in general.
So I think we have a lot of momentum right now. We could see growth probably just shy of 3%, maybe for another couple quarters in a row or so. But the underlying demography of the economy is an aging population with an increasing number of people retiring. Productivity growth still hasn't picked up. So I think heading down to a growth rate more like 1.5 to 2% is, what people should be expecting, and it makes me nervous that more people don't understand that and aren't expecting that.
You've been inside. You've seen it from both sides of the coin. How much credit should a president get? And it kind of leads into the question of, as we go forward, has Donald Trump done something that helps the economy, that hurts the economy, is neutral? I mean, how much effect does a president have?
Right. The economy moves up and down for all sorts of reasons. In 2017, the pickup in U.S. growth mirrored the pickup in Europe, Japan, elsewhere. It wasn't really about the U.S., it was about the global economy. This year, we're pulling away from the pack a little bit, consistent with our late cycle stimulus that they don't have. I think presidents get too much credit when times are good, too much blame when times are bad. And my concern is that the biggest legacy economically of President Trump is going to be restricted immigration, restricted trade, larger budget deficits, and all three of those are going to slow the economy over the next 5 to 10 years.
Let's talk about your longer term here. The theme of this conference, changing market structure, exploring the impact of greater concentration in corporate sectors. There's a debate about whether that's ultimately good or bad for the average person. You've written on this with Peter Orszag, among others, and you tend to come down on the bad side.
Yeah, I'm concerned. The fact is we see more concentration. I think in some sectors that's for good reasons. In retail, it might be that you just have some large companies that are much more efficient and they grow and squeeze out the smaller ones. And at least for now, consumers benefit from that. I think in some other sectors like healthcare, it's because we have lax antitrust enforcement And that has meant, lower salaries for nurses, higher prices for patients, and less innovation. The tech sector is the trickiest because it's brought enormous benefits, but the concentration there is enormous also, and trying to figure out the right balance, I think, is going to be a critical question going forward.
There are people who say that the balance is the question because regulators don't have a good grasp on what all this means. So what should be done?
I think one thing that should be done is tougher antitrust enforcement. If you have a merger coming before you, think twice. The FTC used to, if you were merging from 6 down to 5, they'd study that merger and decide whether to approve it. Now they don't even look at a merger like that. They automatically let it go through. But I think we can also look at some regulations that benefit incumbents that they can handle more easily than new entrants can. And in some cases, I think less regulation would actually help increase competition.